Good afternoon, everyone. Welcome to the Daily Recap. I'm Laz again here on this beautiful Friday afternoon. Wanted to just touch base as we head into a nice weekend here, kind of recapping what I spoke about earlier this morning because nothing really has changed in the market. Let's jump into the charts here. We're going to look at the SPYs. First thing you're going to see in this chart is, let me zoom in, is that we're still sort of hanging on the upper end of this range, and you can see the range going back to the beginning of March. A lot of choppy price action, flat 21 EMA here, which is really the signal that we have to keep an eye out. We did test that upper range at 189, and later in the session today, we sort of tailed off as some sellers crept into that resistance zone and pushed us back down. The real chart that I just sort of rehashing what I spoke about earlier in the morning is this weekly, and again, this very, very choppy. We're now into a, what looks to be an eight or 9 week, 8th or 9th week here of this consolidation. And while we are sitting on the upper end of the range, you still need to be careful about breakouts here. And the one thing that I think we've spoken about is that, what we'd like to see ideally is that all the indexes have this upper level consolidation. And when you look around, we look at the IWM, the Russell, you're not really seeing that. Really more of a bear flag structure here. We sort of broke down, and now we're consolidating on the lower end of the range. This is a weekly, a weekly chart, and we can see our 8 EMA has crossed under our 21. If you go back, even over the last all of 2013, we can see that this index has been firmly strong since roughly the end of 2012. So something definitively changing here in the Russell. Here's the Qs, again, similar. You can see the selling and not quite that reaction back to highs. So not all indexes look the same. It's really a big cap, diamond, Dow, and S&P. Here's the diamonds that are just firmly holding in there. So some divergence here that we need to keep an eye on over the next couple of sessions as I go back to the daily charts. And you'll see me do that from time to time. You'll see me go back from dailies to weeklies, just to give you a sense of like I said earlier in the day, clarity. We'll go back to the SPYs for a second. In the short term, if we go down to, let's say, an hourly chart for those that are, that live in that shorter time period, I would keep an eye on what happens on this short-term trend line. If we can break through this shorter-term rising trend line, maybe early next week, you could see some sellers step back in here. This is again an hourly time frame, so I'm just sort of zooming in, giving you a little more granular look at the market's ebb and flow. But net a very difficult tape to trade, especially if you're someone that's always looking for breakouts or breakdowns. The stocks are, stuck in a range here, and that's a very, very difficult tape to trade, especially, like I said, if you're someone who's active. Some of the things that we need to watch early next week. Some of the symbols that have been in play. Some of the high beta names like a Netflix. You can see Netflix sharp sell-off, snapping back over the last couple of days off of a big decline. We're going to watch to see how these things start to trade over the next few sessions. There could be some opportunity there. Amazon, another big, big momentum name. Apple, the only one, the bunch that, per earnings, big gap up, big run from 5 1/4 from the low 5s to roughly 600 in just, 3 sessions. The stock needs time to rest. The stock needs time to digest these gains. But as you can see over the last, 4 sessions, a nice consolidation here in the upper end of that, move. We go back in time, trading back into, you can see back here the highs of, this bounce back in November, December of 2012. You can see that's when Apple broke from its all-time highs back here at 700. The stock went into free fall mode back in late 2012. It bounced back to about 600 before then declining back to around the 380 area, from which we found this bottom. You can see I'll kind of just highlight this trade. Found a little bit of a bottom in here in that 380. and now trading back into that prior big pivot. So I think this is probably going to mark some sort of short-term top. It wouldn't surprise me if we saw some sellers step in here at some point. Again, we could see another push up, but I'd be very careful about, again, chasing longs. The one thing I will tell you, as somebody who spent years trading, you never want to chase. You don't want to chase a short down. You don't want to chase the long up. There are going to be trades that are going to set up and you're going to be able to participate in. Apple's one of those stocks that had a big gap per earnings, and if you weren't willing to chase it up, there probably wasn't a whole lot of opportunity in there, unless you were a day trader, somebody operating off of, let's say, a 5 or a 15-minute time frame with a much smaller. Again, let's show you a 15-minute chart. With a much smaller time frame or risk-reward ratio. Looks like, for those that are VTF, that live in the VTF, this is probably the area that, there was some opportunity for the day traders. This trade through what looks to be about 570, give you a nice clean break all the way to around 590. So outside of that, not much in there for, for those that weren't willing to, take on a whole lot of risk. So, with trading, it's one of those things where I would tell you that sometimes less is more. And I say that from experience. And I said this morning, think about trading in terms of quality and not quantity. If you're having a tough time or you're struggling to find some good trades and the market's just too choppy for you, that's okay. It's part of what we do. It's part of being a trader. You can't just wake up every day and approach the market as if there's always going to be opportunity and today is going to be as good as last week or last month. Being a good trader and developing good habits is about being able to step away and say, look, I need to wait for more compelling setups, quality, not quantity. So keep your eyes on what the market does early next week. Like I said, there's some. We could go one of two ways, and I hate to be, I hate to sound like somebody who's not definitive or who won't, take a stand. We have lots of different opposing forces. On one hand, you have, indexes that are sitting at or near highs, the Dow, the spydrs, and that could change. As a matter of Monday, we could break out as a matter of Monday. But then on the other side, you have some divergences with some of the big cap tech names in the NASDAQ and some of the small mid caps in the Russell. So you have some opposites, a little bit of tug of war there, and at some point the market will show its true colors. Market will give us a clue as to what it wants to do next. For some of the shorter term players, again, some levels to key on. Keep an eye on this, shorter term trend line. A break of this, could spell some selling, as the market's had a definitively tough time up here. This is the, like I said, the spydrs up around 189. You can see multiple touches along here, 1, 2, 3, and now 4 with a little bit of a tail down today. So, who knows how that turns out. I think, like I said, just be patient in this tape. You have a flat 21 EMA. For those that aren't aware of that, go back and revisit my last, I think one of my, not the last morning call, but the one before that. And I talked a lot about the 21 EMA and how that can be a good signal for you. As always, have a great weekend, and I will speak to you later. Take care.